Hello everyone, in today's video I will be covering the market outlook for the month. So the month gone by, which was September, was a good month for the equities as well Indian as well as global markets. And we saw Nifty going up around 2.28%, the mid cap was up around 1.8%, and small cap was also up by around 1.4% in the month of September. Globally, like Nasdaq was up by close to even over 5%, and China was up around 20+% in the month of September. However, in the month of October, in the initial few days, we've seen a massive amount of FI outflows, close to 25,000+ crores of amount just flowed out, and because of which our markets have corrected close to 4 to 5% from the peak. Now, if you look at the key positives and the key negatives for the Indian markets, so the key positives continue to be the strong structural inflows, domestic inflows. We know SIPs, the monthly SIP is touching close to 25,000 crores now. In addition to the recent rate cut by US Fed, we expect a higher amount of FI inflows to India and other emerging markets, which should help the market to further rally. The recent stimulus package by the Chinese government should boost the economy, the Chinese economy, as so the overall global growth. The key negatives are, number one, the high valuations of certain pockets of Indian markets. We know small mid caps are much more overvalued, and certain pockets are overvalued more than 30+%. And second is the geopolitics and political tensions. We know the ongoing war between Iran and Israel, and there's a possibility of escalation, and that can really impact the markets, especially the oil prices and our growth. Then third is the recent stimulus by the Chinese government to increase the liquidity, the stimulus in terms of reduced rates, opening up the real estate markets can actually attract more and more FI inflows, the hot money more from outflow from the India and towards China to benefit from the recent the lower valuations. And we've seen Chinese market rally over close to 20% in the recent days. However, if you look at both positive and negatives, we believe positives will keep the markets to rally next 6 to 12 months, and we should benefit from the growth with the volatility in the short term. Now I would like to touch upon the key stories, the key developments in Indian markets. The number one is the IPO, the initial public offerings, and we have seen a fantastic year 2024 where we've seen a surge in number of companies which have raised the capital. We have seen close to over 60 companies raised close to around 60,000 crores of money this year. And even on the SME, the small and medium enterprises, we've close to seen around 160+ companies which have raised close to 6,000 crores. So that has been a fantastic story where India has come out shining in the overall Asia Pacific region, where now the share of India was around 30%. And as we know, IPO plays a crucial role in channelizing the investments towards high growth potential industries. So such amount of IPOs and the fundraising proves that the investors' confidence in Indian growth story and further help the markets to grow. And the second key event which we saw in the month of September was the US rate cut, which is long due and long expected also. We saw Fed cutting the rate by around 50 basis points, which is on the higher side. Some of the market players were expecting 25 basis points, so it was taken well by the markets. And with the inflation in US normalizing, and also there are certain pockets of slowing of the growth in the US economy, this rate cut decisions were taken. With this rate cut, we expect the controlled inflation and the growth of US can be taken care of, while further rate cuts can be expected. And the third key event we saw was the recent stimulus package by the Chinese government to increase the liquidity as well as boost the growth of the economy. The key steps taken by there was around the rate cut by around 20 basis points. Even the mortgage rates was cut by around 50 basis points to boost the real estate sector, which really forms around 30+% of economy in China. And secondly, there were also fiscal measures taken or announced to transfer funds to the low income households to increase the consumption and spending. And as a result, we saw investors flocking to the Chinese markets. We saw the markets going up around 20+% in the last few days to benefit from the lower valuation, and this rally could further continue for a few days. So these were the key three events and stories I wanted to highlight. Apart from that, from the Indian markets perspective, we stay bullish. We believe that the positives are greater than the negatives for the markets to rally for next 6 to 12 months. While we also expect the corporate earnings to keep growing by around 14-15% in the coming years, and our investors should look for long-term growth from these markets rather with the volatility in the short to medium term. Thank you.